I think the big turning point has been, the big structural factor holding back our emerging markets over the past 10 years or so has been the dollar. The dollar has been appreciating against a broad basket of other currencies. And typically what you see is when the dollar appreciates like it has over the past 10 years, that leads to bad events in emerging markets. And this time around, it's really just led to kind of doldrums growth in emerging markets, where the growth differential between emerging markets, excluding China, because it's kind of a separate thing now, and developed markets narrowed from about 3-4 percentage points down to, well, just about nothing really in 2020. But even that kind of outcome is better than what we would expect in previous dollar cycles. If you think back to the early 1980s or the mid 1990s into the early 2000s, you saw a number of emerging market financial and debt crises at the end of those dollar cycles. And this time around, we saw a few of those, but just in kind of smaller frontier markets. And most emerging markets actually have managed that appreciation of the dollar much better, but still had these headwinds for economic growth that comes from that.